This business about Goldbach levels.
In this video, I'm going to teach you how to analyze Ethereum, the cryptocurrency, using Goldbach and how all assets, including crypto, obey Goldbach principles of trading levels and algorithms. Now, before I start this, it's important for me to say that, and you can have a look at my post on Twitter, you don't have to be an expert in every single facet of Goldbach in order to be consistently profitable. All you have to do is pick one trading model from Hoppy's official book on Goldbach, learn it, master it, and then become a consistently profitable trader. It's not about understanding the nuances of every single aspect of Goldbach, right? That's just an educational pursuit. What you really want to do is just find one model and then master it, and then you're done. You are financially free. Now, this is the chart for Ethereum. If you are brand new to my work, a lot of this is going to be completely alien to you. So what I recommend you do is order my videos by most popular and maybe watch the first 2 or 3. They have a few thousand views each, and then you should have an introduction to Goldbach. So I'm going to whiz through this pretty quickly to show you how Ethereum is priced using Goldbach. So in order to load up the indicator, you need to find the DMN's ICT AMD Goldbach indicator. Once it's loaded up, I recommend you use these settings. So let's turn off AMD boxes and GB time because you don't need it for this particular example. I'm going to extend the days back to 1,000 just so we have enough data. And let's also make the labels white so you can see what's going on. Now, a little bit of Goldbach theory. The way every asset is priced, especially something like cryptocurrency or a stock, the price plays between the various dealing ranges of Goldbach. So the dealing ranges would be initially from 0 to 3. Once price breaks beyond 3, the dealing range expands to 0 to 9, the next power of 3 number. And then as we penetrate through 9, the dealing range will be 0 to 27, 0 to 81, 0 to 243, and so on. Now, in order to price Ethereum, you need to understand which dealing range it's currently using. So the all-time high of Ethereum is 4,867. So what does that mean? It means that when the dealing range was between 0 and 2187 and price penetrated that, we had to look for the dealing range higher. So the next dealing range it's working between is 0 and 6561. So let's update our indicator. There's the power of 3 number, 6561. Okay. Now, just a quick recap on how these dealing ranges work. Given any price, so this is the current spot price, the Goldbach calculation will tell you what the low of the dealing range is and what the high of the dealing range is. Not only does it tell you what the dealing ranges are, it also tells you where the ICT premium discount arrays will fall. So it says between this level and this level, you'll have the rejection block, the order block, the fair value gap, liquidity void, breaker block, mitigation block, equilibrium, and then we reverse all the way up to the bearish order block and the bearish rejection block. Now, let's try to understand how Ethereum is priced and how it was respecting the Goldbach partitions. So one of these is called a partition. So this one will be the order block partition. This is the fair value gap partition, liquidity void partition. So terminology is a little bit difficult to get your head around, but once you get it, it makes conversation a lot easier and precise. So we know we are within this dealing range, but we have to understand which time frame the candles are operating in. So if we move to the 6-month time frame, we can start getting a clearer picture on the algorithm and why it retraced back into this level. Okay, so there's some ICT knowledge that you need, some basic ICT knowledge, but like I tell everyone within the Goldbach community, you don't have to spend 10 years studying ICT, watching hundreds of thousands of hours of rants and raves and him getting upset about various things. All you have to do is understand the basics in terms of what an order block is, and a fair value gap, and a liquidity void, and a rejection block. Once you understand the basic terminology, all you need to do is read Hoppy's book, and a link to his official book is in the description to this video, and then you are up to speed. Let's extend the price back a little bit further first. Okay, now, so you should understand a little bit of Goldbach Theory now. What would you expect to form between the bottom of this GB partition and this GB partition? You would expect an order block to form, okay? What do we have here? We have an order block. There is your order block. Okay? Now, let's be a little bit more precise. Using the indicator, we can find out where the mean thresholds and the consequent encroachments would be of order blocks and fair value gaps. So let's put that in now. So this is the mean threshold of the order block. Okay, can you see how this order block was also split in half right at the mean threshold? Right, is that a coincidence? You tell me. Once we had the order block and price penetrated above it, we had a slight retrace into the order block, and see how these two 6 monthly candles line up with the top of the order block quite well. Okay, this is a second clue, or a second piece of evidence that Goldbach prices all assets, including cryptocurrency. We then had a fair value gap, followed by a liquidity void. So a fair value gap, you guys understand, it's when you have no wicks between opposing candles. So here's a wick, this would be the fair value gap. Okay, but as Goldbach traders, we understand that the true fair value gap lies between this GB level and this GB level. Okay, so this would be the fair value gap. Okay, and then this would be the liquidity void from here to here. See, price shot up one way. That's what a liquidity void means. It means it's only offering prices one way. So this was the huge pump. If you traded crypto back in 2021, this is what price was doing. This is why it pumped one way, and people couldn't explain why, because we were in the liquidity void level. Okay, so there's your liquidity void. Now, why did price retrace all the way back? Okay, so the bodies of the candles respected 50% of this mitigation block level, and then we retraced back to what level? Why didn't we, if we are ICT traders, we would expect price to retrace to 50% of this gap here, this imbalance, but it overshot it. Can you see? This would be 50%. What it did instead is it attacked 50% of the fair value gap GB level. Do you see that? That's what it attacked. This is the true fair value gap level, not this. This is a liquidity void. So if you are an ICT trader and you're looking for fair value gaps, that's where you have a fair value gap. Any other gap is really an imbalance and not a fair value gap. This is what ICT doesn't tell you. And this is why a lot of ICT traders' fair value gaps don't hold, because they're not in the fair value gap level. They are instead just imbalances. Now, I'm going to keep this video short. Have a look on the 3-month. Let's remove these CE lines to tidy this up. Have a look on the 3-month chart, how equilibrium was respected. So we came up to the mitigation block level. We retraced down. The body did not initially close below equilibrium. Do you see that? And then it rejected off of equilibrium. We are now in a discount. We picked up these outstanding orders in the consequent encroachment of the fair value gap. Let's mark it out for you guys to make it easier. 50% of this gap, not this gap. And then we retraced higher. Given what I've taught you today about Goldbach, you should now understand that the theoretical target price of Ethereum is 6,561, which will be the top of the dealing range. Okay, so what we've done is we created the, going back to the 6 monthly, we created the order block, we retraced back into the fair value gap, and now we should expand to the top of the dealing range, which would be 6561. So that's the target for Ethereum. Now, it depends upon other things, so be aware of what's going on in the world right now. Countries are rolling out their own central bank digital currencies, so they're not going to be overly excited with you having your own way of transacting outside of the system. Okay, so this is not financial advice, but the top of the dealing range is the logical target for Ethereum at the very least. So use that information as you please. If you would like to understand how Bitcoin is priced, I have a few videos on Bitcoin also. My Bitcoin analysis is a lot more in depth. The reason why I kept this short is because it's very similarly priced to how Bitcoin is, where you have these expansions of price, and then we went back and we readdressed the fair value gap in the fair value gap level. But have a look at that if you're a crypto person, and then you can really understand how cryptocurrencies are priced. A lot of my analysis is typically done on futures and Forex. That's what I trade. And Goldbach prices those assets slightly differently. So if you want to learn more about Forex and futures and how to trade it using Goldbach, then do check out any of the videos, maybe some of the videos where I've broken down ICT's trades and I've shown you how his trades respect Goldbach, especially in terms of his entries and his stop loss and his take profit levels. I know this video was quick. Hopefully you were able to stay with me and it wasn't too complicated. If you have any questions about Goldbach, feel free to leave a comment below. And if you would like to learn more, there's a link to Hoppy's official book in the description. And by buying the book, you have lifetime access to the Discord. I hope this has opened your eyes to what is possible in the markets and that you don't need to study thousands of hours of ICT work in order to really pinpoint price and understand how everything is priced. All that I ask is you keep your mind open and allow yourself to become profitable traders.